Hi everyone, it's Steve. How you doing? We're gonna look at the chapter 12 homework right now. It's straightforward stuff again. I think it's a lot of it is doing journal entries, and a lot of it is stuff you've seen before, dealing with sort of your, 10 to net 30, that sort of thing. First one though we have is problem 2 with historic enterprises. The packages get it. And here are their charges and the sales tax rate. Here you're just, what is the total tax charged per customer? So you're going to do your sales tax, figure that out for the small packages, for the large packages. There's a second part to these questions is what is the overall charge per small package? And keep in mind here what the bookie is looking for is each package. It's pretty simple math. It's tax plus overall charge. So, in the past, I've had people will be like, oh, for all the packages, it's not that complicated. If you do that, if, it slips through, that's fine. We'll grade it as such and it'll be right. But if you do get it wrong, you have a question, please let me know. And then, it's just about for the third one is about adding up all of those, 38 small packages, 22 large packages. What is that sales tax liability? So you want to add it up for all of those in total. And the E is just a question that you will have to answer. Okay, now we'll move on. Here they are. You just plug in your answers here. Going into PA3, again, this is one I'm not going to for all of these, I'm not really going to do too many examples because they are pretty straightforward problems, right? And they're pretty straightforward journal entries. You're dealing with your inventories, your accounts payable, right? And just which ones of those. And it does tell you, you have in the problem, you have two different inventory accounts. So you want to make sure that when you do separate those out, because, it's not just inventory because they specify that it's not, right? So you have a floor and you have a tape. And just a hint here, or not a hint really, but just keep in mind, on the 22nd, they bought it on the 12th, that's within the 10 days. So you do need to calculate the discount. And then that's about it for number 3. The other ones are, they're just journal entries, but you should probably be able to handle that. Then for PA4, we're going to pop over here and let's just take a look at PA3. So here, here's this inventory. You've got to make sure that you're getting. Here's the calculations. That many square feet. That's how much it is per square feet. Calculate that stuff out. Same thing here, and then you got to pay for it. And then you got to pay for it. And then PA4 here. So we have some unrecognized income, or unearned income, I should say, not unrecognized, but unearned. And it is just sort of doing that, the journal entry and the record keeping of cash advances, where you're receiving cash, but you haven't done the work yet, right? So it's like you can't say that it's revenue because you haven't done the work. So you have to kind of put it in an account that it's going to be called unearned revenue or landscaping or something like that. Just some kind of something that's unearned, and then eventually, then you're switching that to the earned revenue once the work is done. This is sort of like what can I think? Gift certificates work this way, right? So you receive, not exactly this, not this, but very, very similar in that the company receives money for something they haven't done yet, the gift certificate, right? So like they've gotten money, they have a liability that's outstanding because, like, say you buy a $25 gift certificate to Cruising Coffee, right? So they owe you, they owe someone, whoever gets the card, right? They owe someone $25 of service, whatever that might be. And then when somebody comes through, actually buys the coffee, then you say, you change that unearned coffee revenue to coffee revenue, right? And then you also, if there were any inventory sales, et cetera, et cetera. So there you go. And then that's basically what 4 is all about. And then the final one here is PA8, and this is another pretty straightforward one. it's just, credit terms with some renegotiation. And then you pay the account full. Just, there are 3 journal entries. This is, this is them buying it, this is, for a payable. This is turning their payable into a note, and then this is them paying off the note. Just keep in mind, they pay it off. There is interest, which you gotta calculate. And August, September, October, they pay it off in time. There's no other like funny stuff like late penalties or extra interest. Anything. Pretty straightforward. And that's kind of it for that chapter. If you have any questions, of course, as always, hit me up at Canvas. And enjoy, everybody.